Imagine waking up one morning to find out that your entire financial history, years of bookkeeping and tax data, has vanished. That's the nightmare 35,000 businesses faced on December 27, 2024, when Bench Accounting, once the darling of the bookkeeping industry, abruptly shut down its platform. No warning, no backup plan, just chaos. The Bench platform will no longer be accessible, the notice reads. Customers were told to file for IRS extensions and scramble to download their data by March. But for thousands of small business owners, it was too late. Social media posts lit up with posts like this one. As a customer, I'm pissed off. Others were left stunned, wondering how a company that raised over $113 million could go under so abruptly. So what happened? How did Bench Accounting go from an industry leader to a cautionary tale in startup failure? To understand Bench's downfall, we need to go back to its beginning. A story that started with big dreams and even bigger ambitions. Founded in 2012 by Ian Crosby and a small team in Vancouver, Bench was built on one bold idea: to simplify bookkeeping for small business owners. And for a while, it worked. Bench was one of the first companies to combine professional bookkeeping with cloud-based software. Their promise: accurate financials and total peace of mind. And they delivered for a time. By focusing on ease of use and pairing customers with dedicated bookkeepers, Bench quickly became a game changer for small businesses. 2012, founded with a mission to simplify bookkeeping. 2015, they raised $7 million in Series A funding. 2021, they secured $60 million in Series C funding backed by investors like Bain Capital and Shopify. They weren't just a tech company, they were a lifeline for small businesses. By 2024, Bench boasted over 35,000 customers across the United States and completed more than 1 million months of bookkeeping. Partnerships with giants like Shopify added to their credibility, and it seemed like nothing could stop them. But as often the case with rapid success, there were cracks forming beneath the surface. Cracks that would ultimately bring the entire operation to a halt. Success can often be a double-edged sword, and for Bench, the tipping point came in late 2021. Ian Crosby, the passionate co-founder who had led the company for nearly a decade, was suddenly out. In his own words, Crosby described the moment it all changed. I went out for what I thought would be a regular lunch with a board member. We had just raised a Series C and turned down a highly lucrative acquisition offer. We were winning, but instead, I was told they were bringing in a professional CEO to take the company to the next level. Crosby had clashed with the board over strategy. He wanted to double down on what was already working, and that was building tools for small businesses and leveraging partnerships like Shopify. But the board had other ideas, a new direction Crosby believed was doomed to fail. So rather than fight, Crosby stepped away entirely. And as he left, so did the heart and vision that had driven Bench from the start. It was a classic startup tale. The founder is replaced to make way for professional leadership, but as Crosby warned, it never works. At first, things seemed fine. The company continued to grow, attracting more customers and funding, but beneath the surface, major cracks were forming, fueled by operational efficiency, high attrition, and what some insiders called a lack of expertise. Without its founder, Bench lost the very essence of what made it special, and this would become painfully clear in the years to come. By 2023, the cracks in Bench's foundation were no longer hidden. Customers began noticing a sharp decline in service quality, and the operational struggles that had been brewing for years finally boiled over. One former customer described their books as garbage. Another said they spent more time fixing Bench's mistakes than managing their own business. So what was the issue? Well, Bench was relying on unqualified staff, allegedly, sometimes marketing grads with no accounting experience to handle the books. And instead of fixing these issues, the leadership seemed to double down on its flawed business model. The irony is that Bench was founded to make bookkeeping easier, but their approach became their undoing. They weren't just over-promising, they were under-delivering. Even with over $113 million in funding, Bench couldn't turn a profit. They poured money into customer acquisition, paying for top spots on sites like Google Ads and offering low prices they just couldn't sustain. But when you're bleeding cash and offering subpar service, it's only a matter of time before the cracks turn into a full-blown collapse. And that collapse came on December 27, 2024, when Bench abruptly announced it was shutting down. 35,000 businesses were left scrambling to download their financial data before it disappeared. For many, it was already too late. We regret to inform you that as of December 27, 2024, the Bench platform will no longer be accessible. The shockwaves were immediate. Customers were angry, confused, and panicked. Many feared losing years of their financial history. Others have to file IRS extensions because they can't get their data in time. And if that wasn't dramatic enough, the story took another twist. Just days after the shutdown, a notice appeared on Bench's website. Check this out. Exciting news. Bench has been acquired by Employer.com. But what does that really mean for its customers and its reputation? I don't know. It seems they're back in business for now, but with the abrupt shutdown in December, would you still trust them? According to an article by Payments.com, Employer.com will revive the Bench platform, and that Bench customers will be allowed to keep their service under the new ownership or port their data. Employer.com is a brand new company I've never heard of. They focused on human resources tech, including payroll and onboarding, and is acquiring other companies in the HR space, according to the report. Let me know in the comments if you think Bench will prosper under this new acquisition. Regardless, it's a great opportunity for Bench users to retrieve and back up their data. The fall of Bench accounting isn't just a story about a startup that couldn't scale. It's a wake-up call for founders, for investors, and for small business owners. So what can we learn from this? Lesson 1. Founders matter. First, let's talk about the founder's role in a company. Ian Crosby, Bench's co-founder, said it best. Replacing a founder with a professional CEO to upgrade a company never works. Bench lost its vision when Crosby left. He wasn't just a CEO, he was the heart of the company. This isn't just a Bench problem. We've seen it happen in other companies where founders are pushed out and the replacements fail to carry the same vision forward. It's a lesson for investors. Tread carefully when changes are made at the top. Lesson 2, the dangers of scaling too fast. Bench's collapse highlights the dangers of scaling too quickly. Their business model relied on people, not technology, to deliver results. And while they were acquiring customers at record speed, they simply couldn't keep up with the demand. When you're growing faster than your ability to deliver quality service, it's only a matter of time before your customers lose trust. And in Bench's case, that trust was broken beyond repair. Lesson 3, always back up your financial data. And here's a lesson for all small business owners. Always have a backup plan for your financial data. Thousands of Bench customers were blindsided by the shutting down, scrambling to recover years of bookkeeping and tax records. Some tips for protecting your financial data: use a secure secondary storage system for backups and regularly export your financial data from online platforms. And you can't easily do that with QuickBooks. Then export the general ledger for each year. This gives you all the financial numbers you might need just in case. Partner with a reliable bookkeeping professional who prioritizes your needs. And keep in mind, you get what you pay for. Your financial history is the backbone of your business. Don't leave it vulnerable to the mistakes or failures of others. Lesson 4, the reality of tech-driven bookkeeping. Lastly, Bench's story shows us the limits of technology in bookkeeping. While automation is powerful, it can't replace the expertise and judgment of an experienced accountant or bookkeeper. And if you're looking for cheap bookkeeping services, just be careful. Sure, low-cost services may seem like a great deal, but what happens when you need personalized advice or someone to navigate complex issues? That's where they can fall short. At the end of the day, bookkeeping isn't just about numbers, it's about understanding the unique needs of every business, and that's something technology alone can't solve. Yes, the story of Bench accounting is dramatic, but it's also full of lessons for all of us. At the end of the day, Bench accounting's rise and fall isn't just a story about failure. It's a story about the importance of making smart decisions for your business, whether it's choosing the right partners, safeguarding your data, or scaling responsibly. These lessons are here to help us all navigate the challenges of running a business. And if you're one of the small business owners impacted by Bench's shutdown, remember, you're not alone. There are incredible bookkeepers and accountants out there who can help you rebuild and move forward. What can you do now? Basically, you'll want to assess the state of your books and export any available data immediately if possible. File for a 6-month IRS tax extension if necessary, and consider transitioning to a reliable bookkeeping solution that meets your needs. And finally, back up your financial data regularly to avoid future disruptions. As a CPA, I know how stressful managing your books can be, especially when a service you trusted lets you down. If you're looking for guidance, I'd be happy to connect you with trusted professionals who can help you get back on track. Feel free to leave a comment or reach out to me directly, or actually join my free Facebook group where a lot of them hang out and answer questions. I'll link that in the description. And now I want to hear from you. Were you impacted by Bench's shutdown, or have you ever dealt with a similar situation? Share your story in the comments below. I'd love to hear your thoughts. Don't forget to like this video, subscribe to the channel, and hit that notification bell so you don't miss out on any tips, stories, and insights to help your business thrive. Thanks for watching, and I'll see you in the next video.